Nvidia shares hitting a record high again in today's trading, up about 3%. Analysts have been optimistic ahead of the chipmakers' earnings later this month, sending the shares up by almost 40% this year after a nearly 240% surge in 2023. And that sentiment, by the way, optimism broadly over chips being echoed by the Semiconductor Industry Association today. They say the market outlook is extremely strong, citing a big rebound at the end of last year despite a slow start, and predicting double-digit growth in 2024. Let's bring in Stacy Rasgon, Bernstein's managing director and senior analyst who covers chips. Stacy, always great to get some time with you to dig into the chip industry. And obviously, people are feeling fairly good right here, especially about Nvidia. And I wanted to start there if we could. They're not reporting earnings for a few weeks, but man, there is a lot of optimism already being baked into that report. Do you think they're going to be able to match it?
Look, I think for now numbers go up. That seems clear. You sort of talked about the semiconductor industry as a whole, and I think you gave the SIA's forecast. Semi should grow, I think, this year. Not everything though. Like not everything is made equal. But one of the areas I think should be growing a lot is AI, and they are clearly like the most exposed to that space. They're one of the few that are actually making real money in that space. It's one of the few areas where expectation, not just expectation, but actually reality across the players that are there, where those expectations are actually getting upgraded rather than downgraded. I think for now for Nvidia numbers likely go up. They're still going to be shipping everything I think that they can make, and so we'll see if it's enough to match the expectations as you put it. But I would even push back a little bit there. Like if you're looking at valuations, which are like a signal of expectations, Nvidia is actually one of the cheaper AI plays. The stock today is trading something like 32 times forward earnings. Those earnings are likely to go up, I think, in my opinion. It's way cheaper than AMD. It's cheaper than Marvell. It's even cheaper than Intel right now. So I would argue that like expectations, I mean, they're high. Maybe they could stand to even be higher.
And Stacy, I'm interested, we just heard from the hyperscalers, right? Those big cloud giants, Amazon, Microsoft, Alphabet. When you heard their CapEx plans, Stacy, what were the big takeaways from that for chip investors?
Well, CapEx is going up,
Yep.
which is good, especially on the AI front. One of the broader questions for AI is there's a lot of investment going on, sure, but you can sort of look at some of the numbers that are there for Nvidia or others, and you say, well, where are those dollars coming from? Like we want to see CapEx go up, and we are actually starting to see that now, I think, in a bigger way from a lot of the hyperscalers and some others. CapEx spending is going up.
So let's circle back then to the point that you made that this is not a monolithic industry, right? That there are going to be those that are more leveraged to AI and the other stuff that there's demand for. So I guess I'll take the other side of it. Who is not going to be benefiting from that trend that investors maybe should stay away from right now?
Well, let me separate stocks from revenues right now. Let's talk about revenues. And you're right, the SIA, I think, said they put out a forecast for growth. Fine. Semiconductors should grow this year. We were down about 8% last year, and memory was down a lot, and non-memory was down a little. This is an asynchronous cycle. Certain end markets are sort of through their cycles and returning to growth. Other end markets are kind of in the meat of it, and others are just starting to roll. So AI is clearly off the charts. Like that's growing. Things like PCs and smartphones, which actually went through their bathtubs, they were very weak last year. They're coming out the other side of it. Those should probably grow this year some. I'd say things that are sort of like more in the meat of the downturn now, traditional data center server CPUs, networking, that sort of thing are pretty weak. And then I would say the industrial and auto spaces that affect a lot of the analog names, those are just starting to roll. And in some cases like industrial, they're rolling over hard, and auto's starting to show some cracks. I would hazard a guess that industrial and auto end markets probably do not grow revenues. They're probably down this year.
And Stacy, while I have you, I want to get your thoughts on another name that made some headlines. Intel making these news, kind of delaying the timeline for the company's Ohio plant. I'm just curious, Stacy, what you made of that headline, and what do you think it means for Intel?
Yeah, so I don't there was people wondering if it meant anything with their process roadmap. And look, I'm not a huge Intel fan, as many know. However, I don't think that those delay announcements, such as they were, had anything to do with their process roadmap. I think it has to do with the fact that they don't need the capacity, right? This is a dynamic sort of thing. Like they are doing construction, they're building the building, but at the same time, these factories it's going to be $20 billion. Like you don't dig a hole and throw $20 billion into it and then sit around the edge and wait for customers to show up, right? I mean, you build capacity as you need it, and you can look at where their revenues have gone in the year or two since they put out the original timelines for those factories, and the revenue trajectory has clearly changed, right? It's a lot lower today than it was. They're adding capacity in a lot of other places. They probably don't need them on the time frame that they had them on, or on the original schedule. And so it's kind of a dynamic thing, and they'll bring it up and running when they need to bring it up and running. They don't need it right now.
And Stacy, though, for these plants, as you're building them out, these advanced chip making plants, do these companies have the staff for these plants? I mean, it's one thing to build and fill an advanced chip making plant, but then you actually need people to lead it and staff it. Do they have that labor force?
Yeah, so in fact, it's even difficult right now getting the construction labor force to build them, right? That's not an easy thing. And no, I think this is a broader, let me put Intel aside, like this is a broader issue for the semiconductor industry. If you can look like globally at the number of fab projects that have been announced here in the US and in Europe and in Japan and in Taiwan and in China and even in places like India maybe, you need a lot of like highly skilled workers. I can't remember, I think I can't remember if it was SEMI or the SIA, but they put out some number that it was like something by 2030, like the semiconductor industry would need like 1 million skilled workers or something globally to support the infrastructure. So no, I think labor and talent management is an enormous issue as we are bringing these things up and running. Intel, for example, is actually working in Ohio with education. There's some things around the CHIPS Act for labor and talent and workforce. But these are enormous issues if we're going to bring the kind of capacity online that I think is being talked about over the next, like call it like decades. Like you're going to need people here.
Yeah, and I guess a lot of those jobs are not ones that AI can replace, especially when you're talking about actually physically building a thing. But I want to turn to China for just a second, because you and your team were out with a note looking at some predictions for China AI. And they're sort of specific, so I want to zoom out a little bit and just talk about China versus the US and sort of where we are in that development. Can you talk to us about that and sort of where we are and who stands to win, or is it not sort of zero sum here?
Well, so there are export controls now that were put on US companies selling AI parts into China. Mostly they affect Nvidia. They don't really affect others because most of the others, the revenues were very, very small. Nvidia had a sizable business in China. And under the export controls as they currently stand, Nvidia basically can't sell any of these AI parts in China at all. They are working on new parts that will be legal to sell. However, given the performance thresholds that are around these sanctions, they have to drop the performance very considerably. And in fact, there are local Chinese alternatives from companies like Huawei that, at least on paper, will have better performance than what Nvidia is allowed to sell into China. What Nvidia will have is software compatibility. And like a lot of the existing AI infrastructure and models that have been built in China were already built on Nvidia hardware. And so they're leveraging Nvidia, the Nvidia software ecosystem. And so the Nvidia parts will allow seamless integration with that. And so they're probably more suitable, I would think, for more of the tier 2 developers. The larger ones, in China may go with other alternatives if they've got the resources available to port everything over. I would say long term, though, I kind of view this, my view is once they put sanctions on a year ago, I think long term the China TAM for the US guys is going to be impaired because they've lowered these thresholds. But even if they never did, they were never going to be raised. And so the gap between what is legal for US companies to sell into China in terms of performance and the rest of the world is going to get bigger and bigger and bigger over time anyways. And so I think you do need to think about that TAM ideally as potentially as impaired. Now, I think the overall TAM long-term is enormous. I think it's big with or without China, so I think it's manageable, but you need to do that. I will put aside, by the way, the whole question of was this whole thing the right thing to do? I mean, I can understand the national security implications of wanting to constrain China's ability to build this up. But at the same time, and it's not just AI, it's AI and it's equipment and all kinds of other things. We are forcing China to become creative, right? In all senses of that word.
Well, that's what I was going to ask you, Stacy. I mean, how far are Chinese chip developers from matching Nvidia? You said the Huawei chips allegedly can do what the lower, what the lower performance ones can do. But I mean, it still seems like there's still a pretty big gap between homegrown chips and what Nvidia is producing elsewhere.
It is. And so what does that mean? That means that you'll have to shovel a lot more chips at the problem. So for example, the Huawei Ascend supposedly is roughly equivalent to an Nvidia A100. That part for Nvidia is 2 or 3 years old. On a performance basis, it's roughly equivalent. Again, it doesn't have the software ecosystem and everything, but if you just want to take that, I mean, fine. So that if they want to get the same amount of performance that Nvidia's or others are delivering with their current parts, they'll have to put a lot more silicon in place in order to do that. So that costs money in terms of chip cost. It costs a lot of money in terms of power and infrastructure and everything else. And so is it going to be cost competitive? Like if they had to sell that stuff elsewhere in the world? Absolutely not. It's not competitive. But they have no choice. So they'll do it. We saw the same thing like on smartphones. Huawei is making smartphone chips again, using supposedly SMIC 7-nanometer processes, which are not going to be competitive with what, say, Qualcomm or other main suppliers can provide. And they're going to burn more power. They're going to cost a lot more. But again, if you have no choice, you will do it. And then over time, you will try to figure out ways to optimize within the constraints that you have. Again, they are going to have to be creative. I don't know what this means, 10 years from now, 15 years from now. But it will be more challenging. And China in general is a big market for US and other suppliers. It's going to be tougher. It's going to be tougher. I don't know what it looks like, though, as we kind of roll this out. All
right, we'll keep watching. Dr. Stacy Rasgon, thanks for joining the show, my friend. Always love having you.
My pleasure.